Greetings and good day from investwithanedge.com. This is John Schloegel in Austin, Texas. Excited to be here again with you today, following up our Reco from last week's pick of the week, which was Frontier Development Group, symbol FRG. That baby has been going guns and gonzo and higher, and we want to give those who are interested in the uranium type sector a broad-based pick, and we're going to offer to you today an ETF in that space. It's the MarketVectors Uranium ETF, symbol NLR. In fact, there's two ETFs that have a uranium exposure. iShares has a global nuclear energy ETF, symbol NUCL. But frankly, the key difference, other than activity, volume, and value traded, which is substantially tilted towards NLR's favor, the MarketVectors ETF, is that the iShares offering has a greater component weight in the utility type area, which is the utilities that are manufacturing electricity through the use of nuclear power, which is fine, but NLR has a greater tilt towards the mining type companies rather than sort of the utility players. So we think the biggest bang for the buck is going to be in NLR as opposed to NUCL. You could own them both to get diversified basket of uranium type stocks, but we're going to give you the NLR as the Reco of the day. Now, the quick and dirty on NLR is the fact that it's got 25 stocks. It's a concentrated portfolio. Average expense ratio is around 61 basis points. It has great international exposure, so it's sort of a global type ETF with exposure in Canada, United States, Australia, France, South Africa, and it is equally spread around large cap, mid cap, small cap stocks. So it's a representative pick. It's one we like a lot, especially with uranium prices continuing in their uptrend. They're up about 25%. This is the spot price, up 25% in the last 4 or 5 weeks. We don't see any reason that trend's going to change, and we especially like the fact that the dollar is weak, commodity prices, hard assets are going up, and we need you to have exposure in this area, especially because of a lousy dollar, stronger commodities, stronger hard assets. What we really like about NLR, and one of the reasons we pitched Frontier to you last week, is the fact that it's got these miners associated with it. So once you take out the Camecos, the Constellations, the Mitsubishi Heavies, the EDF, and the Exelon, the top 5 positions in NLR, you get to some juicy and sexy shares, such as Paladin, Uranium One, First Uranium, Energy Resources of Australia. You go on down the list, you'll find Uranium Participation Corp, Denison Mines, Frontier, Forsyth. So there's a lot to like with the MarketVectors Uranium ETF. We think you should own it. The technicals are extremely strong. It's booming today. Last I looked, it was up 4%. So you got to be a little bit careful here. It's come a long way in a short period of time. Buy it on pullbacks. What's exciting, though, is the 50-day moving average is about to cross up and above the 200-day. That's going to take place in a few weeks, assuming everything stays the same as it is now. And with this unpredictable market, things can get out of whack very quickly. But from a technical perspective, we like it. The fundamentals, we like it extremely well. We think you should have some in your portfolio. So that's all I have for now. This is John Schloegel, investwithanedge.com from Austin, Texas. Good luck.